Good morning, everyone, and welcome to the European crossover webinar. And we have seen a nice rebound here in equity futures. We've got the S&Ps up here at 3280, well, actually 3279 and a half. But we've had a very nice rebound here in equities, and correspondingly one also not to the same extent, but one here also in crude oil. As I mentioned here, nice run back up here in equities, and also, as I mentioned earlier, just a moment ago, also pretty nice rebound or pullback after dipping below $50 here in equity and crude oil. We've also seen gold continue to remain under pressure. We had that strong move up here, almost getting up here to $1,600, and since then we've just been going lower and lower. We're actually at the lows now. We dipped off yesterday, came back, rebounded a little bit, and we've turned around and rolled right back over as equities have continued to go on to improve. Looking into the economic data for today, we did have the RBA decision yesterday. You can see here they held it the same. We'll touch base on that a little bit. But we do have coming up at the top of this next hour, Italian CPI, as well as Eurozone producer prices. And then much later in the morning, we do have New Zealand dairy prices. As we come into the States, so we have payrolls benchmark. Then we have New York ISM and business conditions, durable goods, factory orders, and that will be it. Other than manufacturing PMI out of Mexico. That'll be at 10:30 a.m. Eastern. We do have New Zealand unemployment. That's going to be at the very end of the day, or it rolling into the next day, depending on your neck of the woods. Crude oil continues to climb. We're already up to 51.26 now. We were just knocking on the door at $51, and now we're at 51.26. With that, we'll go in and take a look at the news. Dollar firm on manufacturing data and Australian dollar gains after the RBA. The dollar held firm on Tuesday after key U.S. manufacturing surveys showed a surprise recovery, while the Australian dollar rose after the central bank left rates steady and retained the outlook despite bushfires at home and a virus epidemic in China. The widening coronavirus outbreak in China kept markets on edge. However, while traders also eyed the U.S. state of Iowa, where Democrats began a month-long process to choose a challenger to President Trump, the dollar index held firm at 97.83. The boost came after the Institute of Supply Management reported that the U.S. factory activity unexpectedly rebounded in January after contracting for 5 straight months amid a surge in new orders. Against the yen, the dollar traded at 108.70 after a gain of 0.3 on Monday, the biggest gain in a downtrend that started in mid-January. The euro stood at 10.57, having slipped to 0.3% on Monday. The Aussie dollar rose 1/3% to 67.14, pulling away from its 10.5-year low of 66.70 touched last October after the RBA kept its main cash rate at a record low 0.75%. It also retained forecasts for economic growth this year and next at 2.75% and 3% respectively, despite the devastating bushfires at home and the threat to growth posed by China's rapidly spreading coronavirus. Still, interest rate futures are fully priced in one rate cut by May, with coronavirus adding to the headwinds to the Chinese economy, Australia's major export market. The death toll in China rose to 425 as the end of Monday, with infections now at more than 20,000. The RB said it was too early to determine how long-lasting the impact for the virus will be. The question is, how long will it take to contain the epidemic? While some people are selling risk assets, there's also a lot of people who are looking for a chance to be bargain hunting, said Ayako Sarah. If we start to see a decline in the number of new cases, then we could see an end, but at the moment it's hard to say when that will happen. The offshore yuan gained to 7.00221. On the whole, the epidemic is not necessarily negative for the yuan demand supply balance. Bulk of Chinese server account data deficit comes from the Chinese travel spending overseas, and that looks set to shrink for now. We'll see inflows of funds to Chinese stocks yesterday, so no sign of captive flight either. Elsewhere, sterling was soft at 1.299. And having lost 1.5% on Monday on renewed worries about Britain's relations with the European Union. Prime Minister Boris Johnson set up tough terms for the Brexit talks with the European Union, rekindling fears Britain would reach the end of an 11-month transition period without agreeing to a trade deal. Traders are also casting an eye on the U.S. state of Iowa and are kicking as they kick off the process to choose a challenger. Market players say a victory by a progressive candidate such as Bernie Sanders and Elizabeth Warren could hurt shares and safe haven currencies, as some of their policies are thought to be not in the best interest of Wall Street. And lastly, oil prices rebound, fueled by hopes by OPEC and supply cuts. Oil prices clawed back ground on Tuesday, rising as much as 1% after the previous session's slump, amid hopes for a new output from OPEC and its allies to offset any drop in fuel demand that might be triggered by China's outbreak. Despite Tuesday's gains, an extended slide over the last 2 weeks on concern of the global economic impact of the virus means prices are more than 20% lower this year's peak on January the 8th. People familiar with the matter told Reuters on Monday that the Organization of Petroleum Export Countries and its allies, including Russia, known as OPEC, were considering cutting crude output by a further 500,000 barrels per day. Some 500,000 barrels per day cut is expected, but we aren't ruling out any even deeper cut should the situation warrant it, said Margaret Yang. Despite the return to calmer trading, mirroring over financial markets on Tuesday, Goldman Sachs warned that while it sees oil production respond to the situation by cutting supplies, the virus outbreak impact on demand is likely to keep volatility and spot prices elevated. Coronavirus has now claimed 420 lives. Oil prices are now at levels where we would expect a supply response from OPEC and shale producers, and where China will likely seek to build crude inventories. Still, others warn that any failure by OPEC to take what investors deem suitably robust action to limit the impact of the virus could trigger further price drops. And that's enough of that. With that, we'll go on and take a look at the pairs. So starting off with the euro. The euro turned around on Friday during the, well, actually this wasn't even, I forgot that I didn't even update. I mean, I did the update for the euro, but I didn't post the notes on that. So bear with me. Just want to pull that out. All the others, I posted the notes on there. Thought it was made more sense than having to refer back. So the euro turned from the challenge of the trend line on Monday. Turned from the challenge of the trend line and resistance levels at 1105, and we talked about this because as we closed out the week, we came in, we were talked about the significance of this returning back to this trend line and this level at 1105 correspondingly. And we said it would take 2 consecutive closes above to, break the downside momentum for now. And then it would take a full close above 1170 to actually negate the head and shoulders. But obviously that didn't happen. On Monday, the euro turned from that challenge of the trend line and resistance level at 1105. The pair found support just below 1140, closing at 1060, where we're at right now. Support on Tuesday will be 1040. A close below 1020 will send the euro to new lows on this move. Resistance remains at 1105. So it's rather disappointing here with the euro, in the sense that, like I said, it looked like we may be able to push higher, and we turned away when we dipped all the way back down here to down here to 1036 before we rebounded a little bit. But we're just stuck here in the quagmire. We're really not doing anything with this for now. Support for the meantime is going to be at the same area here, the 1040. And resistance will remain at 1105. Now, if we do get past that, I mean, there's strong support here, 11, keep saying 11, at 1020 here. If we were to close beyond that, then the completion of this move would take place. We'd be heading down here to these lows. If we were to turn around and fall back and close, let's say we close the day below 1020, forget it. It'd just be sell, 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 sell. Regardless of what it wanted to do to turn around, this thing would just start sliding down like nobody's business. But anyway, the support's going to be 1040 with resistance at 1105. Moving on to the cable. So cable did it to the bulls again. The difference this time was that the bulls could have hung their hat on, or actually hung the hat on, the technically bullish close on Friday, which was right at 3,200. The close on Monday was a whisper above the major pivot, which is 2980. We're still above that for right now. We've actually dipped already below that. Intraday support comes in at 2934 with a potential short-term target of 2898. Resistance is going to be 3038. Bulls need to close above 3108 to slow the bears down. So a lot of technical levels there, but as I mentioned, we had failed, after making it all the way up to 32 and had a great close on Friday, only to see the cable give all of that back and just fool the bears again. Fool the bulls again. So here we've slipped back. We've come all the way back here to the pivot. And you can see the pivot's been around since seems like forever. And you can see here that we had our support today at 2934. We've come as low, we've come as low as 2941. So once again, support today is going to be 2934. And resistance is going to be right there, 3038. Now, as I mentioned, for the additional details, bulls need to close above 3108 to slow the bears down. Bears are in full control, and potentially, like I said, we have support today at 2934, but potentially we can make this move down here to 2898. And boy, what a pullback that's been. Let's go move into the Aussie dollar. Well, the RBA held, so let's take a look here at the Aussie dollar. The Aussie is open to further break on the cusp of the RBA meeting. Of course, the analysis was done before the RBA meeting. Support is 65.83, which will be the 161% of the 67.55 to 70.32. That's going to be this most recent move here. Followed by weekly support at 65.28. Resistance is 67.48, followed by 67.88. At this point, it's all about the technical. So like I said, they already factored in everything going on about the RBA, and still, I mean, that they weren't going to cut, and still this thing was just falling off a cliff. So it's only the technicals that matter, regardless of what the RBA says. So there's your resistance at 67.48. We did hold this downside in light of that. It's just a matter of time. You would think that they may end up, well, depending on things, how things play out with China, whether we challenge and go back to lows again. You can see right here, it's going to be here at, going to retain those lows that we had before, which was 66.67. We'll keep that here, and we'll see how the rest of the day plays out, but not a whole lot of activity post RBA. Moving on to the Kiwi. The Kiwi remains stuck in the rut at lower levels. The pair is likely to drift lower to 64.16, which is a 61% of this move of 62.01 to 67.56 before buyers step in. Resistance, 65.27, with two consecutive daily closes above 65.46 for bulls to reclaim the upper hand. So as mentioned here, we've got resistance at 65.27. We'd actually tightened it up yesterday, had it at 64.93, and we're going to stay with that 64.93, that key major level, and then support. If we do make that slide down, we're looking for a move all the way down to 64.16. But remember, we put the support, we came in right there at 64.32, thinking, okay, well, before we get there for the day, let's look for the support to be here with the backup at the 61%. But we're still trading in a tight range, so there's no change in the bias chart support and resistance level here in the Kiwi. Okay, so the key level 64.93 is resistance. And before we get to 61%, we do have 32 coming here, this little level here. So that's going to remain the same. Moving on to the dollar CAD. The dollar CAD finally woke with a vengeance after days of incremental gains. The pair finished the day strong with closing above 32.69. The pair has the potential now to 34.20. Intermediate resistance is going to be 33.09, and support is 32.31. So once again, like I said, we finally broke higher here. We've been, we had broken higher, and we thought, okay, we're going to start to see a run, and we saw this strong bar here, and then the market just kind of sat here. and then we moved just a little bit higher. Finally, yesterday we not only had a good range, but we finished towards the top of the range, and we took out key resistance. So, finally a change here for the dollar CAD. That being said, as I mentioned here, resistance coming into today is going to be 33.09, and but we do have the potential. We do have the potential here for a move to 34.20. So 33.09 is resistance with support at 32.31. And definitely bullish. And onto the peso. And there's no changes here in the peso. It still remains the same. We're looking at this 1865 as support. And we're up even higher because yesterday our support was 1878, but you can see we're backing back down again, and for good reason, because we've seen this nice run up here at equities. So looking out, we're looking at 1865 here with 1862 as the 161% of this recent failed rally. And we've been stuck in the mud. This market has just simply not reacted up or down here. So 1865. And resistance is going to be right there. 1883. Let's. Well, the dollar yen finished in a rather quiet session on Tuesday, actually on Monday, I should say. Resistance remains at 886, followed by 911. But we're certainly pushing above that now with the strength that we've seen in equities. So we'll have our secondary resistance, which is going to be 911. We're going to retain that bearishness as long as it stays below the pivot of 927. And as far as support, I'm going to go right there, right across here. There. It's going to be 837. And a decent little rebound, not out of the norm, but a decent little rebound. I mean, considering how strong the equities have been, could have seen even more, but we'll see how we hold out here. And moving into the cash dollar index. The cash dollar index rebounded right back to the weekly pivot of 97.89, abetted by the weakness in cable. Intraday resistance will be 98.11 with support at 97.41. So we have actually even pushed above the pivot we've come up a little bit short of 98, but you can see we're rebounding back again. So we'll see how this plays out. But got this 97.89 once again key, but intraday resistance is going to be 98.11. And support at 97.41. And that's a key level here. It's been in place for a while. With that, we'll move into the cross rates. We can see cable has come off of those lows. We're up at 29.94 for right now. So after a good slide here, and like I said, it's amazing that the run, the prior run that we had, that 3-week run was nothing short of amazing. We talked about it yesterday, and then the dip back, and then a retest, which came close. So it failed right there. You can see the closes right there, came up short, and then from there we fell apart as the yen strengthened, obviously brought on with the whole coronavirus. Well, we studied ourselves yesterday, and we're trying to work a little bit higher today. Certainly nothing to write home about, but if we are to get any kind of a turnaround, the resistance is going to be, you can see that clear as a bell. It's going to be right there at 71.01. And looking into support, it's going to be the day's lows. And when I'm referring to that is if you're looking to get long, then that would be, this is where we're looking at it from this vantage point, it would be your risk, which is going to be 70 even. That'd be your risk. You wouldn't want, I mean, if you get below that, basically have to, have your stops right there. You can see that's coming right across these highs here. So it's going to be 70 even. Let's go move into the euro yen. Well, we kind of studied ourselves here with the euro yen. We had fallen, down, but overall, even throughout the week with the coronavirus, we were still kind of holding our own here. We've now started to go on and push a little bit higher as the yen has started to go on weekend. And this really has more to do with what we've seen here in the equities markets. But nonetheless, we've moved higher. So resistance at this point is going to come in right there, which is going to be 2077. 2077 for resistance. Holding our own pretty well here on the lows overall. We are starting to see things turn around a bit. Let's go and move into the 2 hours so you can see something more definitive on the support. Coming across right there. You see that these 2 touches right here? That's going to be support, which is going to be 2015. go and move into the euro odd. Well, we've seen some decent little volatility here with the euro odd. I mean, on the backdrop of not only the Aussie weakness, but then then you turn around and the euro turns around and gets weak, and then of course the RBA. So this is probably, I mean, from an intraday, if someone wanted to trade intraday, it's probably not a bad little play there. But we're within this range. I think we're going to go on, and you can see right there is going to be the resistance here. Now that might even be a stretch, to be quite honest with you, but it's going to be the resistance 65, 69. Still think that's a bit of a stretch. Let's go move into the 2 hour. Just think if we get some a little closer. There we go. That's going to be resistance 65, 16. 65, 16. And support. Right there. 63.78. It's still pretty good fall. Yeah, right here. It's going to be right there. 64, basically 64.01. 64.01, and almost a little bit before then. Let's go with 64.01 here. Let's go move on to the Euro Kiwi. Trading a relatively quiet day yesterday. I don't know which was more quieter. I mean, the euro was certainly weaker, but I'm just saying is with the Kiwi and these two, after 2 strong days, probably to be expected digesting the gains. Resistance is going to be right there at that level, 71.68, with support coming in right there. 70.28. Moving into the Aussie Yen, we've stabilized here. Obviously, we're starting to pick up a little bit, also coupled with the weakness in the yen. So we do have the potential to go and move a little bit higher. How much higher? We're looking at it coming right there. You can see it coming across this high. See right there, this close. Confluence is right here with this open and almost close here. So you can look at there. It's going to be right there. 73.67. Well, we've held this area here with the 61% here. That's still going to go and remain for support here. So I'm just going to go with the 72.46, which is at 61%. They'll probably kind of flop around in here. I'm thinking you probably maybe might back, do a little bit of back and forth. But this is the area right here, the 72.46. You break that, that really opens the door for them to push lower. But if you're looking at it from trading it from a bounce perspective, think it this way. This is your risk level right here. So it's going to be 72.46 on the downside. And I'm looking here with the guppy. Well, this probably has a little bit more to do with yen weakness and sterling strength. The sterling really took a pretty good dip yesterday. Actually, could have even been worse. I mean, when you look at it compared to the yen, I mean, boy, did we see a fall against the dollar. Resistance, let's go and take a look here on the 2-hour chart. Boy, it looks like a smart move there. I mean, as far as good strength. Resistance is going to be right there, coming across. All right, done that close. It's going to be 42.20. So we do have some more room to move. Still pushing higher. Support, pretty clear right here where they broke out from, right there. 41.40, 41.40, right there. But certainly looks like they're going to make that run. So look at that right here at 42.20 coming right across. It's going in now. Let's mark that off. There. So move up here to 42.20. Let's go move into sterling versus the yuan. So pretty good downdraft here for the prior on Monday. After that strong close here on Friday, it looked like we were going to be up and away. And boy, did we come down here. Support you can see coming right across there. And actually that's where it stopped it. You can see that right here. why these closes and opens are so important. You can see right where they went to, right to that open. Exactly, took it out by maybe a couple of pips, maybe 5 pips, and boom, right there. So there's going to be your support here, which is going to be 92.64. Resistance, let's go and take a look here on the 2-hour chart. Going to be right there at 94.46, 94.46 for resistance. Let's go and move back into the majors. You're just kind of hanging around here, and certainly got to have a lot of disappointed bulls. I mean, you know, we talked about at the beginning yesterday of the webinar, European crossover webinar, about the potential for the dollar to move higher, because there was a story here that, you know, once China opened up, there'd be an issue with the dollars, and that could provide a bid. And certainly we saw that. And I thought, okay, if they dip down here, pretty good little binary, and we could probably push higher. I thought we'd probably be even higher this morning. I mean, I picked it up, I just scalped out, but I thought we'd probably even be higher at this point, and we're just kind of marking time. So the door's still open for this to slide back. We'll see how it holds here, but certainly if we get past, you know, probably like 1032, 1030, that's probably going to be an area where longs just go and say, you know what, forget it. But we shall go in and see. Cable, now just a little bit above 130, and looks like the dollar yen did make it up to that bias chart resistance we have 911. They actually made it up to, looks to be up to 913. So really just a couple of pips above our bias chart resistance here, that secondary resistance. Aussie kind of sliding back in here again, not really doing anything of any real significance. Getting back here to equities. Certainly seen this strong move here. Return back here in equities, resistance. Already had a pretty good run here. Look at that. That's pretty good where we're at now. But if they could stretch it further, probably going to come in right there at 32.87. We're already in pretty good strength, but right here, this whole area here is good resistance. But up on the stretch side, probably right around 32.88. 32.88, so another 7 higher here, potentially. And looking at crude, this thing is really falling off a cliff. $52.36, but we are a ways away. I mean, just it's incredible how much this has fallen. We could take a look at a 2-hour chart. Yeah, some good resistance here at 51.25. But I mean, they were already looking to go in and cut back, talking about OPEC. But market is pretty oversold. We did get that dip below $50, so we may just kind of dance around here for today. And gold. Some disappointment. Oh, came right into that support. Look at that, 1569. Good support area right there. Look at that. See all these touches coming across here. So find some support from there. But that's what we have for today. Thanks for joining us here on the European Crossover Webinar, and we'll see you in the chat room.